everyone hear me at the back there? I'll just make sure I've got a loud enough voice, hopefully. Eric, can you hear me back there? I don't, but I'll try and speak up. Eric, can you hear me back there? Can you hear me? Yeah, loud and clear? Excellent. Okay, great. Look, thank you. I just want to thank everyone for coming tonight. It's a pleasure to have Perth's blockchain and crypto enthusiasts. My name is Matiu Rudolph. I am the COO of LayerOneX, and on behalf of myself and the team, I'd like to welcome everyone here tonight. Thank you for taking the time to come here. Tonight we're going to give a bit of a presentation about LayerOneX. We're going to show you some demonstrations about with the capability of the platform as well, and we'll go through a few of the other aspects of the project for you. And at the end of our presentation, and hopefully it won't take too long, we'll try and wrap it up quickly, but at the end of the presentation we'll be hanging around as well. So if you have questions specifically, whether it be around investment or technology or whatever it is, all the team is going to be around to be able to answer those questions. Sound good? Yeah, excellent. So look, I'll give you a bit of a background on LayerOneX to start with. LayerOneX was actually it's the idea and the genius of Kevin Coutinho, our founder. Started almost 2 years ago when he drafted a white paper, and then he took it to UWA. And he worked on it with the University of Western Australia. So it is Perth owned, which we're proud to say. Yeah, absolutely. And they worked on that white paper, and one of the founding principles, the design principles that came out of that paper is that LayerOneX should give users access to all chains and all applications on those chains safely, securely, cheaply, and efficiently as well. And that principle will guide us all the way through as we go on through the years to come as well. And we'll show you some of the capabilities that we've managed to achieve with that principle guiding us along the way. We started building it out really almost about 1.5 years ago. So it has been in the works for a while, and it's had a lot of thought put into it. We've partnered with some serious players in the industry around tokenomics, around also setting up the foundation. But let me take you through a little bit of it now. Can you still hear me at the back? Is that still okay? Yeah, excellent. So the team is made up. We've got a really comprehensive team. All up, there's almost about 30 people in the team, mostly based here in Perth, and spread out across the world. We've got we've been pretty lucky in the bear market to pick up some amazing developers and add them to our team. I think we've picked up about 5 in the last few weeks, and there's some amazing talent out there to really build out our development team. So we've got over 100 years of developer and research experience within the team. We've got experience in marketing, in law, and capital raising as well. So there's a really comprehensive team. We're really confident with the team that we can actually take this Layer 1 project to be one of the top Layer 1s within blockchain. So I'll probably start with maybe some of the problems that are faced in the market as well that we wanted to address. So for those of you who already know crypto well, and for those of you who have maybe dabbled in it, a lot of these chains within crypto are built in silos, meaning that if you're wanting to operate on that chain, you can do that. But when you want to start to interoperate between chains, so let's say I want to transfer some assets or some tokens or NFTs across chain, that's where it becomes difficult. Right? That's when also it becomes unsafe. So one of the problems we wanted to address is we wanted to allow access outside of those silos within blockchain, so people could then not only transfer but also start to collaborate. And that's probably the second problem that we see, is that at the moment when you're transferring across chain, it's normally around tokens and NFTs. So your classic tokens like BNB and Ethereum, transferring those, or some of the NFTs in the market as well. What hasn't been achieved yet, where we look to achieve, is also the transfer of logic, meaning that a smart contract on Matic will be able to now talk to a smart contract on AVAX and start to collaborate. So let's say I'm in a company and I'm stuck in this silo, and you're in another company stuck in that silo. Now what we're allowing is that we can start to have a conversation and start to collaborate and start to create new innovations within the space that have never been seen before. And it opens up a whole range of use cases that we can see, and a whole range that we can't see yet because of the innovation and the minds that will start to work with LayerOneX as well. Some of the other problems that we've got in the market at the moment as well is scalability. So there is limitations in a lot of chains in terms of their scalability, meaning their ability to be able to take on mass adoption. So if you can imagine a chain needs to be able to take, if it really is built for mass adoption, it needs to be able to take on millions of users and be able to handle that amount of usage on the chain and still have a seamless user experience. So it doesn't become clunky when all those users come on there, and it doesn't create issues with that user experience. And then the last one is security, and hopefully no one got caught up in FTX last year. Hopefully no one did. But the centralization of some of the, obviously the central exchange, but also the centralization of some of the chains out there does cause a factor or cause an issue in terms of security. So really it's about accessing, making the chains, taking them out of that silo, right? Allowing chains now and smart contracts to communicate and collaborate with each other, having scalability performance where a chain can take on mass adoption and still have a seamless user experience. And then lastly, decentralizing that. So, the old saying goes, not your keys, not your crypto. If we can keep custody, if we can help the user keep custody of those tokens as they're using and as they're transferring cross-chain, then ultimately that's what we want to do, to have a safe experience as well. So what the team has come up with, and led by Kevin, our founder, is the solution is this. So Layer 1 is the very first Layer 1 blockchain that delivers on all four of what we call the blockchain quartet. And that is interoperability, meaning allowing transfer and collaboration cross-chain. It's decentralization, so there's no kind of central control within the system that can cause censorship and a whole lot of other things as well. Scalability, like I said, a chain that can actually take on mass adoption and still keep that user experience seamless. And then lastly, security, a level of security where users can actually operate safely within the system as well. And so really that's the solution that Layer 1 provides, and we'll continue to build out. We're really excited actually tonight, we'll get to a part where we'll be able to demonstrate some of the capabilities, which is somewhat rare when you're looking at projects before they launch. The amount of the capability that we'll be able to demonstrate before we launch in August will be pretty phenomenal, and I think it's really going to set us up to be a market leader. We're actually already starting to be a market leader in terms of interoperability, and we'll look to build out and continue that movement forward as well. So I'm going to invite Kevin up to actually talk about the project itself. So go into that a little bit, give you a bit of details into the project and show you some demonstrations as well. Kevin, you want to come up?
Is there any way to blow up your slides?
Yeah, I'll try to zoom in. My name is Kevin. I'm the founder of LayerOneX. I came to Australia probably, I think, 5 years now, since I've been here. I came here with the intention of working, in KPMG or EY, getting a job, doing something, here substantially that can contribute, something that I could always remember if I stopped working. But gladly, for example, one of the investors here, Norman, I don't know where he is. He did give me an opportunity, funded the company, since the previous projects that I did, and it did a transaction with listed companies. And I think LayerOneX is a culmination of not 2 to 3 years of work that the team has. The team has been amazing. All I do is sit there and code. That's it. I don't get out of the office. But it's a culmination of probably 28 years of my life thinking about what the infrastructure or what tech looks like in an evolving perspective. Like if we are moving from Web 2 to Web 3, how does that impact everyone's life, right? Because it would be a shame to move from Web 2 and have a wrapper on Web 3 with Web 2, right? You control your data, but we're going to tell you what you control. That should not be the case. Getting into the product itself, I was going to go through the slides first. Probably let's look at the demonstration first. Let's see what we can actually do right now with the protocol. And this is only maybe 0.1% of what it will do in the next 5 years. Okay, so this is the testnet. I don't know if you can see that, but maybe if you can turn off the lights, please. You guys are fine, right? There. Turn off the lights, please. Yeah, I think much better. Okay. All right. If everyone in the back can see the screen?
Come forward, everyone. Don't be afraid.
It's going to blow your mind like yourself. Okay. Okay. So I take a lot of pride in this because this is the only Aussie layer 1
Woohoo!
that can actually do what we are going to demonstrate today. It has never happened before. So we'll start with a very simple thing. Let's start with, a wallet. So the testnet basically is going to allow you to create a wallet, send tokens, create NFT, create a token on the blockchain, send it to somebody else, perform interoperability, all with the same address, right? One person doing everything. So I already have my wallet loaded, but let's generate a wallet over here. So when you generate a wallet, of course, this is going to be packaged up for you in the LayerOneX wallet. But you can see you got your public key and your private key. Now all you need to do is save your private key somewhere, please. But copy your public key, and you can go to the wallet section. And this is live. You can go home and test it as well, right? This is not a front end. This is a back end and front end integrated together. Now, of course, I want to first check my balance, right? I want to check how many LayerOneX coins do I have. So I go to the check balance. I already have my public key there because it recognized that your wallet has been imported. I can check my balance. So if you see, I've got quite a bit of balance there.
Impressive.
Okay, I've got quite a bit of balance there. This is all going to be.
Is that the treasury? That's the treasury. It must be the treasury.
Let's talk later about it. Okay, I've got a deal. Okay. Anyways, now let's transfer it to someone. So let's transfer it to the person we just created the wallet for, right? So anyone could go in there, create a wallet. I can transfer you the token and take it back. Just kidding. Okay. Let's transfer it. So this is the recipient address. So you see the recipient address over here, and I'm going to put in the amount. So let's say any amount. 10,000. 10,000. That's a lot of coins. Okay. Done. Transfer. The 10,000 has been transferred to that person. So the system is running on 5 full nodes at this stage, and we have managed to get. I'll get into the consensus later on, don't worry about it. But it's quick, that's what I mean. It's fast. In less than a second, you did the transaction. But how do you really know you did the transaction? Okay, you go to home.
The browser.
Yeah, and you check for that transaction. Why is it there?
We need to zoom out.
The blockchain browser, right?
It's kind of zoomed out, isn't it?
Zoom out. Zoom in.
Okay. No, it's not focusing right.
Put it back.
Yeah, okay, that should be fine. I'll work around that. Old school tech. Old school. Okay, so you can see the transaction hash over here. You can see the status. You can see created at. You can see from. You can see to. You can see the amount. You can see the signature, leader key. So these are your transaction level details. These are the details that you've got when you're doing the transaction. Now, let's do an interesting thing. Let's create a token, right? How fast is it to create a token? Let's create a token straight away. So we call it the LayerOneX program library. Library basically means that I want to do this. I want to create a token. Please tell me how to do it.
Please.
So I go to create. So your token name. Any ideas for the name? Bob.
Sophia.
Sophia.
There's one name, please.
Sophia.
It's not
Sophia.
interoperable right now.
Sophia.
Sophie. Okay. You want to call it Sophie tokens or just Sophie?
Sure. Sophie.
Sophie. Okay. What's your token symbol, Sophie?
SOP.
SOP. Okay.
H maybe.
SOPH. Okay.
Yeah.
Token decimals 18. 18 decimals.
18.
Precision. Okay.
10 billion maybe.
Too much.
Does the platform allow to do that? Yeah, it should work.
Probably 2 million.
I think so. Okay, you created token. That token created. Now you can send it to anyone, right? And that person can verify it. Now, okay, let's verify that you created the token, right? A few seconds ago, there you go. Your transaction hash, your token number, your token name, your token symbol, everything in there, right? Your token decimals,
Total supply.
Total supply, yeah, everything. Okay, now let's create a new
That's
wallet
amazing.
and send it to that wallet. Right? Okay, let's transfer the token that we just created. So I can't read it. Sophie, there you go. So you select the Sophie address. So you select the Sophie, you have various tokens. So if I created multiples, I'll have multiple into my wallet. I put in the address that we just created. How many do you want to send, Sophie?
Maybe half of it. It's treasury. It's treasury.
9.99 billion.
It's treasury.
Let's send. Done. Transfer. So you created your wallet, you created your token, and you transferred it to somebody else. Yeah, simple.
But are you paying for gas?
For transactions only on L1X, actually it is 1/100th of a cent.
100th.
Yeah, of a
Okay.
cent.
Okay.
And the price is deterministic. It will never increase. So if Solana tells you the price is deterministic, it's not. But if because Solana's price goes up by 20x, the transaction fee will go in, right? I know
price in what, in LX1?
L1X, yes. Yes. So the transaction fee has to be paid in L1X.
And that's for
right?
transfer though.
Yes,
Yeah.
Regardless how much you transfer.
regardless.
But it's for the transfer transaction.
Yeah, the easiest way to understand that is anytime you are trying to update anything on the blockchain, that is a transaction fee,
Yeah.
right? If you go in and you check your balance, Sophie, there you go.
Brilliant.
So you just sent, you created and you sent. So that's your balance. If you want to check the transaction hash, you go in and check the transaction hash.
1 cent, 100 or 1 cent.
Okay. Now let's create an NFT.
0,
Right.
0, 1.
You could create anything that you wanted through an NFT. You could put a song in there, it would work. You could put, a movie, not your personal movie, I hope, but a movie that you record openly. No, openly meaning in the whatever it is. Okay, I'm not getting into it. All right. So let's say any names for the NFT? 888. Okay, let's create one for Sophie. Sophie NFT.
Podcast.
I'm gonna charge her after that, so let's just.
Sophie NFTs.
Okay,
Yeah.
Welcome to my podcast.
Sophie NFT. In the metadata, what that metadata actually means is, if you have a song, right? Any song can be converted into a JSON file or a metadata, meaning the computer understands what that song is. And you could just put that metadata in there, or you could, in the coming time, you could use a converter. You upload anything, it will convert back for you and put it on the chain. So let's take an image. So I want to take an image. Any images around? Let's just take a screenshot of this itself, that I'm creating it.
I have a question. Do
Yeah.
you have a file size limitation?
1 MB for a smart contract, but for NFT, there is no file size limitation because we're going to use.
So you can upload a 4 gig?
Yes.
Yes?
Yes.
Like an MP3?
Because we use IPFS.
Audio.
We're not going to store it in the centralized space. So IPFS is an add-on service that you take. So if your file size is more than 1 MB, Ethereum smart contract size is 400 KB. If it's more than 1 MB, we will direct your file to an IPFS technology. Of course, you will have to pay for that. So, I mean, you can't put 100 GB and still pay a cent. That would be great, but you'll still have to pay for IPFS, but that data is still decentralized.
Okay.
It's still connected to the
Yep.
chain. And it's inbuilt. We don't use a secondary IPFS and do it. Okay, let me go to my desktop. Let's see the screenshot. I think this was it. Yep. So I uploaded the image and I'm creating the NFT. So it's creating the contract for you and creating the NFT on the chain and syncing it across all the nodes. That NFT was created.
There's
So-
currently 4 nodes.
Yeah, 5.
5 nodes.
What kind of standard is this? 7 to 1 or?
We have our own
50?
library standard.
Ah, yeah.
So because I'll get into technicality later on.
Sure.
Yeah.
I was curious.
Yeah, no, we have got our own compiler, own interpreter, and our own program library. So we haven't borrowed anything from anyone. It's all built ground up.
Can I ask what programming language you
Rust.
primarily use?
Rust.
Okay, Russ.
Okay, so you have your NFT, you create it there. You can go and Sophie NFT and check the balance. Okay, you can check your metadata here. That should be the image.
Nice.
Yeah.
Sophie, hold on for you.
You could actually even send it to someone over here. Or you could create various versions of the NFT that you just had. So you could create an album and have various types of files in there and send it through, right? Now let's look at the fun part, the interoperability part, right? That's what is exciting about LayerOneX. So when we talk about interoperability, when you're trying to send, for example, tokens from one chain to the other, our interoperability protocol is customized. Now when I say customized, I like to call it like the interoperability Lego blocks. So if you want to, for example, transfer token from one chain to the other and do something else completely irrelevant on the other chain, you would still be able to do that. Whereas a bridge is deterministic, meaning no, you only have to follow this path. Let's take an analogy for how this would look like in real life. When you're trying to cross between two different rivers, right? You've got a car, you've got a bike, you've got a bus, you've got animals crossing. Right? In India, you get animals crossing. Right? So you build a bridge. Every time someone crosses, a different bridge for animal, a different bridge for a car, it's expensive. What if the car size changes? But no, only a white car with this size can pass through this bridge because the other bridge only understands that. In our case, what we do is we dynamically create bridges or dynamically create connectors every time you want to do something. One example is if your data is with the government or with some, let's say, insurance company, you could get your data in and based on that data, do something else on the other chain. You don't have to share your whole thing. When you go to the bar, you show him the card and he's looking at your address, okay, show the address, okay, You don't need to show him the address, right? You only show that much, how much you require. To do that in CS language, we have used something called as homomorphic encryption, right? Boring stuff. But anyways, let's go from EVM to EVA. Let's go from everyone who said we're fast and cheap, and did the ICO. Let's look at those chains first. So let's say I go from Matic. I've got Matic here. I have to approve. I switch the network, and I've got Matic, and I've got, for example, USDC, right? Not got a lot of it, but it should be fine. Okay, let's go to Binance. Oh, let's do USDT because USDC. Now, what is the reason for this? The reason would be if a merchant is accepting payments only in Binance coins and you've got Matic coins, how do you pay for that, right? How do you pay for that thing to happen? So anyone could plug this in. I was talking to James, and James was mentioning on the GFE side where if the person is on Solana or Polygon, and if you build on Binance, you have to make the payment on Binance. But what if the person doesn't want Binance? He wants Bitcoin, he wants Ethereum, he wants something else, right? So that freedom of decision making. Let's enter the small amount. Check for approval. I confirm. And if anything goes wrong, it's not us, it's Binance and Matic, okay? just making it clear before I see any errors on the screen. Yeah. Now I process the transaction, meaning first I allow the exchange to actually perform the transaction for me, and then I process the transaction. That now you have the authority to go and process it. While this is happening, our software takes in the information from the Matic blockchain, goes to the Binance chain, but it does it dynamically. It does it through adapters. So if I had a listener in terms of listening that the transaction has happened on Matic, and I wanted to go and create NFT here, transfer NFT on the other chain, or maybe do 3-4 other things, I can do that. Oh, it's done already, okay. So the transaction has successfully completed, but how do we know that it's actually completed, right?
Go to the browser.
Yes. You go to the browser again. The browser is a source of truth. It has all the information, right? It has the transaction hash, which is the hash of the LayerOneX chain of the LayerOneX virtual machine. And I'm very proud of the fact that we have actually built the first compiler in the world, or are finalizing the build. Okay, let me tell you the truth. Finalizing the build of the first compiler in the world that takes information from the web that is built on blockchain and sends it to the system processor on the full nodes. There is no language out there or no compiler that can do that. It allows us, multiple things, so faster, doing it quick, doing it. You go to BSC, that's your transaction hash. I just sent $10. Now, how do I verify this was through LayerOneX? If you do a little bit of a digging and you decode, there is something called as a unique ID over here. This unique ID and the ID over here is the same. The C95, yeah, is the same. Now what that means is, a developer on the other chain can look at this ID and can say, yes, everything is good, go and do something else. A bridge doesn't do that. A bridge sends the amount, right? And the other person receiving it does not exactly know whether did this person actually go through a consensus? Is it coming from a centralized exchange? I really do not know. This unique ID can only be generated through our consensus mechanism, right? So that is the unique ID, and we saw that the transaction was done. Well, okay, there are people who are still doing that. Okay, Kevin, what's different? Oh well, it's built on a layer 1 infrastructure, and one of the difference over here is, let me give you an example. Sorry, Ethereum guys, but when you build an Ethereum contract, or even, for example, Solana contract, let's say you have a situation, right? My situation is, if my account balance is less than 1,000, right? Then I want you to go and remove my investment from this chain and bring it back into my account. If my account balance is more than 1,000, then automatically, please go to this chain and invest it in a stable coin format. The Ethereum contract cannot understand that. It executes everything line by line. If it has to wait and go and check for the balance and come back, it's already too late. It's already processed. So in computer science, we call that asynchronous learning. So I'm waiting. I told you something, I'm waiting for you to come back. We have actually built a way where you can have asynchronous calls, meaning you can process, you can interact with the other chain, come back, process, do something on the other chain, come back, process. Now let's look at EVM to Solana. That was the video that we sent out, right? So let's look at EVM to Solana now, right? I hope it works, but it should. Okay. Now, let's say I'm going on Matic. I like to use Matic because transaction fees are less compared to the other ones. Ethereum, I need to borrow only to pay for my fees. Then again, to borrow, I need to pay for the fees. If you call a math, you can please send me some ETH, man. Okay, so let's say we've got, last time we did USDT, right? Let's go to USDC this time, okay. Let's do Solana here. Let's do USDC. I think we did USDC. In my rehearsal, I was doing USDT, so it should be fine, yeah. So let's say I want to transfer 10. And I paste my Solana address here. So what I did was I went to my wallet, Solana wallet. By the way, when LayerOneX launches, you'll have one wallet and all your assets will be stored in one wallet. So you won't have to switch between different wallets. Your tokens, your health records, everything in one place. And if some doctor wants to see it, that's the protocol we are building with the Singapore company and the Singapore government, where a doctor sending a health record from one He sends it through email and uploads it on Google Drive that is public. He said, Jesus, man. Okay. So if he sends through email that this is the link of the Google Drive, please go and open it from there, he can't do that anymore. So the system is being built where your information, when you need to send, you approve that and only send how much you need. Don't send my whole history. He doesn't need to know everything about it. I've got a crush on Droplet, don't do that. Okay. Now, I want to send 10, meaning I've got Matic. I want to receive Solana, right? So I'm sending from and to. Again, the process of checking the approval. If there are delays over here, it's because you're trying to connect to the Matic and Solana network, and half of the time these nodes on Matic and Solana, they just don't work. I don't get it.
Which miner are you using in Matic?
Sorry?
Which miner are you using in Matic?
We're using quick node. So okay, the approval is done. Let me process the transaction. So now this thing goes and gets the event over there and goes through our consensus system, creates the unique ID, goes to the other chain, and okay, Solana, I know that you can do this. Go and please process it for me. Okay, the transaction hash has come through. That means the transaction was successful, and so that you feel good about it, we are not the only layer 1 in Australia, but we are the first ones in the world to have gone from an EVM to a non-EVM in a decentralized consensus mechanism using our own virtual machine.
Yeah.
Yeah. And when I display it to Neo protocol developers, Polygon guys, when they come on board, the first question is, how is this even possible without the bridge? Right?
Question.
Yeah. Please.
That Sophie NFT that you just created,
Yeah.
which is on your LayerOne blockchain,
Yeah.
can you send that to my Phantom wallet right now?
Not right now. No. Not and we would your Phantom wallet on Solana. No, not right now. But that will happen sometime in the 3rd week of June.
Okay.
So right now the tokens are interoperable, then we'll have the NFTs interoperable, then the identification will be interoperable, and then the custom interoperability. So the way we are building it is we build the infrastructure, but now we've got to build libraries in LayerOneX that handles that for you. So it's Sophie, sends you 10 tokens, for example, and you got an NFT. Or let's say you send Sophie 10 tokens, and Sophie wants to send her NFT to you, you will be able to do that in one transaction. Token to NFT. Okay, so how do we know that the transaction on Solana has happened? Same thing. You go on Solana and on Matic. There you go.
Yeah.
You go on Matic, same thing. You go there, UUID, right? You check that, what is that? D09, same one. So that's the unique ID. So it all goes through a consensus system. And one of the demonstration actually that I'm very looking forward to is one of the persons we were talking about. I keep forgetting his name. Maybe because you left too early. But you could have an NFT on the Binance Smart Chain, and I'll tell you how that is done. You'll have an NFT on the Binance Smart Chain, and you're using that NFT on a gate. So you have to log in with your account that holds that NFT. But Binance or Binance Smart Chain doesn't have a lot of liquidity. So what do? You want to sell the NFT. You go on to Ethereum OpenSea Marketplace and create a wrapped version of that NFT, right? So you can keep using it on the Binance chain and while selling it here. Now the problem here is, if this guy decides to sell it on the Binance chain, the OpenSea guy doesn't know, right? It's a small thing. Even if you build a bridge, right? The bridge did its job. It wrapped it and put it there. Now how will we solve this problem with LayerOneX? The way we will solve this problem through LayerOneX is, when you are wanting to create a wrapped version of the token on Ethereum, the user along with LayerOneX has something called as a multi-sig contract. What it means is, the user and LayerOneX sign a contract together to go and create the wrapped version of that NFT in OpenSea Ethereum marketplace. The only reason we do that is if the user decides to do anything with that NFT, either on Binance or on Ethereum, automatically it will be taking it down from the other places. So that's the execution register. Now, that particular logic, you could use it when you are buying and selling cars, for example. You could use it if you are trying to ship someone something as a second-hand product, that if I do not receive the product on the supply chain, do not release these payments, right? So it's the potential is huge, but the way this has to be built is you build the infrastructure enough, and the VM has been built from ground up in a way, if you think about it. And when you're building features on top of it, right, you're building certain libraries that allow you to go and customize and do whatever you wanted to. And it has to be customizable enough to be used across various situations. So if example, Sophie was sending the NFT from her wallet to another wallet, in that particular case, that is a specific use case, right? So the platform we are building first has to accommodate for multiple use cases that could have been built with this, and then build that up. A direct implementation in the platform is easy. We could spin up a contract on both the ends and allow LayerOneX to do it. But how do you make something that customizable, that looks at the next 12 months, 15 months, and make it work? Because there are so many moving parts to this in terms of how the contracts are built, how the consensus works, how the new VM is adopting to the traffic coming in. We did slow down. We did have some traffic coming through the Discord. People just jumped on the testnet, and we had to put rate limiters, right? So we are working on optimizing it, but the product is there. People can go in, and if there is someone who looks at the transaction hashes, creates a structure, and works it way back, you'll understand that this is going through an intensive hashing creation mechanism. So that's the way you will know that the platform works as well. I'm excited because August, when we do the launch, we've already got certain projects building with us. That's a few million users. I think Mike, where's Mike? Mike will tell you more about those projects. Thank you.
Nice.
Background, just to give a little bit of an idea, I've worked across military. I actually worked in crypto before it was even known, back to 1984. So the concepts around there with encryption I've had as part of my blood for decades. It's obviously all changed now across with the with the advent of blockchain. However, the concepts are all still there. And Kevin's talking about homomorphic encryption before. I'm going to touch on some projects in a minute, but just to blow your mind with that, homomorphic encryption means that you actually take the data and you're viewing the data whilst it's encrypted. You're performing a transaction on that encrypted data. Okay. Now, how the heck is that possible? That's the I'll call it secret sauce that sits behind the way homomorphic encryption works. Sorry, I just thought I'd add that one in there. Look, what we're seeking to do here is actually to unite all the blockchains. So we've got 8 chains that we link to now already. The key there is that we're not seeking to compete against them, but to unite them all. To champion decentralized interoperability, to bring that to the masses, to make it actually available. And yes, there's probably a whole bunch of techos and crypto heads in the room, which is fantastic. But for the end user, for somebody out there, it means they're going to get a wallet on their phone that they'll have similar qualities to their current banking app. But then they'll have the ability to do all of their investments in crypto and stake and earn rewards or dividends equivalent from that. Yes, there might be a little bit of an extra learning curve about what the difference between some of the terminology is, but the concepts will be there. Okay, and some of the other capabilities Kevin's looking at the moment, I'll wait that we can do that as alpha rather than start talking about it all now, because there's some pretty amazing things coming. What projects have we got building on us? Well, we've already got one called Wired. Now, that's already got a user base out there of in excess of 1 million users, so they'll become validators on the network. Once we launch, we'll have potentially thousands of nodes out there, and you start talking about encryption and being, the hacks that can occur out there in the network. When you're talking about a bridge or a centralised exchange, you're really only talking about a very small number of nodes or servers that are running that those hackers have to try and access. To try and access ours, you've literally got to crack, of 1 million users, you've got to crack 51% of those validators, okay, so they're all those mobile users, at the same time as you're hacking and cracking the back-end nodes that are running on it. So that brings the power of that, of the scalability of the platform, introduces the security. And the decentralisation of all those nodes and all of those validators means that also adds to it. So they all work together, those 4 components of the quartet. So Wide is basically a blockchain-based marketplace, which essentially uses a wallet or an app. And we've already got a couple thousand odd, or Wide themselves have got a couple thousand, what do you call them? Sorry, vendors out there, and merchants actually is the correct term. Thank you, Kevin. What else have we got? The NFT marketplace. So Kevin's shown you some of the capability there. Now, a lot of people understand NFTs as just being things like artwork. Well, it's more than that, because NFTs actually start taking on a different realm when you start talking about your health record. Okay, what's currently my health record out there is actually a electronic record. It's not a digital identity that's backed up by the blockchain and where your data is secured in at a block level or a cell level. Okay, and that's what the blockchain will actually bring to that. Kevin mentioned about the gaming before, where an NFT minted on the Binance Smart Chain used in the game can still be played, as well as that put up for sale on, say, OpenSea Marketplace. Now, you go, yeah, okay, well, so what does that mean to me? Well, when you talk about, there's probably 3 areas we're looking at. The DeFi and DEX space, we've got HealthLink, which is the medical one, but then the gaming side of things. We look at the number of transactions out there in the gaming world at the moment, and we did an estimate, I think it was 3%, looking at 3% of the market out there will give us 82 billion transactions a year, just at the current levels. Okay. Now, moving those games across from the likes of Web 2, or where it's running on a PC, across to Web 3, means that you can then start leveraging some of the features of blockchain to be able to give those players rewards, but also for other companies to come in there and say, add a bit of gamification of, say, advertising in the game. So somebody might be playing a quest game. They can actually branch out and play a side quest, earn some rewards on that, but effectively that side quest is really another add-on to the game, but it's basically an advert for the company. Now, the advertising industry is going to look at that and going to blow their mind. That's the sort of applications that we're looking at and how we can actually apply some of these things. We've got the DEX coming up, I mentioned that before. Decentralized exchange, we've awarded that the contract for the DEX across to a consortium of DEX Finance and EMP Money, and we're actively building that DEX out at the moment to build out those feature sets. And our timeline on that is extremely aggressive. We believe we'll have most of that ready for around May for a demonstration. That's what we're working to very hard at the moment. HealthLink, Kevin mentioned that before about linking up those health systems. The collaboration of patient data between health systems, whether it's a hospital and those hospital-based electronic medical record, through to practice, GPs, specialists, what else? Pathology and radiology, so all those that information can go via the chain, and it's not insecure. I've actually worked in healthcare, and I know that a lot of that information is actually still today sent via fax. Okay, seriously, your health records are sent via fax. Okay, I know that because they were doing that up until only 6 months ago, and I know they haven't got replacement systems for those, so I know it's still happening today. And that should worry you. Your data is not secure.
It does. I just don't go with doctors.
Yep. There you go. We've got another one coming up, which is VX Finance. And in that, we call it a no-code Web3 ecosystem. That's where a founder can go in and actually build their own blockchain, okay, out there on, basically it's a Web3 blockchain, but they can build that within minutes and pick and choose the various components they want and pick and choose and design their own tokenomics, whatever they want around it. And that's pretty powerful. Now, how many people are going to use that? Well, you might want to use something like that. You could use it in your business and create something in there for your own blockchain just for internal use, okay, if you're smart. Supply chain and logistics, we've touched on that. There's mining companies here in Perth that we've already spoken to that need to be able to basically tokenise their mining products through from raw material through to refinement through to use in various products out there. They're already discussions that we've started having out there with those companies, and they're still approaching us today. What else is there? There's real estate's another one. Tokenised real estate. Okay, that's another concept that we're working through at the moment with a particular project. We've also already got investors sitting overseas that are very interested in doing that, and they're quite high net worth. So some of those properties are worth $1 billion US for a particular one shopping centre, as an example. So imagine that being tokenised, where you as an individual can actually go in there and invest $1,000, $10,000, whatever you want, in a commercial property. Go and try and do that today. It's going to be very difficult. The most you can do is go onto the stock exchange and buy a few shares in a company. But what about those direct assets? To be able to utilise the chain to identify things like, let's say, diamonds, where each diamond will get a unique laser etched number. That can be tracked from production, from mining all the way through to production.
My wife is going to like
yeah, absolutely. Yeah. So the use cases are just, you think of it and come to us and have a talk. You know, the wallet itself, Kevin's spoken about that before. That's actually got some huge potential out there when you start talking about being able to use that to go and buy a cup of coffee. Yeah, try and do that on Ethereum today and pay $20 in fees for a $5 coffee. Good luck. We all know that. That's not going to work. But when you start introducing LayerOneX and the capabilities in there where you go and buy that coffee for $5 and you do the transaction, and that actual transaction is really only cost you a cent above the coffee, that becomes acceptable.
It's cheaper than debit card.
Exactly. Just hit the nail on the head. And that means that if it's cheaper than a debit card, the scope for adoption, mass adoption, is absolutely huge. To be able to take your funds and go overseas and utilise that in any country without having to pay for those transaction fees for foreign exchange, etc. You can just pay for it out of that crypto. It's a global currency. Okay, and that's just the monetary side of it. When you actually start looking at using it for health records, for storage of that and identifying you, and we've already been invited to talk with the government around digital identities. Okay, so we'll be doing that potentially over the next few weeks when we can find some time at the moment. Guys looking at
that's your work, man.
yeah, I know. Well,
Anyway.
and that's been the good thing. Since I've joined, the bit that I've actually enjoyed is that Kevin can now get in there and actually start coding and focusing where he needs to. The guy's a genius, okay? He's very humble. He doesn't like acknowledging it, but this is absolutely amazing. What he's done there is amazing. So my job there is to take all that stuff off him and work on it with Matthew. Between the pair of us, I think we tend to sort it out. So.
You're doing all right.
Yeah, you're doing all right. Yeah. So I'll hand back over to Matthew to finish off for us.
No, you're doing
Thank
great,
you.
if that's what you want me to say.
Yeah, absolutely.
We'll skip a few, just kind of. Oh, maybe not. Maybe I won't.
Oh, sorry, you have to go through a few.
Oh, yeah, cool. Let me. What's it? What have I done now?
I think you're just standing in.
That's why I don't do the tech stuff. Yeah, cool. Oh, yeah, cool.
Look, I won't go over this too much, but the market size is pretty massive. We'll be looking at three major areas, which is gaming, DeFi, and health. Gaming and DeFi, because gaming takes up almost half of all transactions across blockchain. LayerOneX is built for mass adoption, mass use case. So we're looking for those mass kind of use cases through gaming, through DeFi, and we're using health as a way to showcase that we are doing something different in the blockchain space and introducing a new industry. We're actually talking to multiple different industries at the moment. We're looking to showcase health as something different in the industry. The market on just gaming, digital payments, and health is huge. So what does that mean to you? So tokenomics-wise, we did engage Prism Group. We were purposeful in doing engaging Prism Group for the tokenomics, and we spent months on going through the tokenomics with Prism Group. One of the key factors I want to go through within the tokenomics is the distribution of transaction fees. So there is what we call a hard cap, meaning a limit on the amount of tokens within of the LayerOneX token. That is 1 billion. maximum, and that is actually vested out over a period of 30 years. So it's a long time vested out. But with the transaction fees, when the transaction fees come into the system, they're distributed in 3 different ways. So 50% of all the transaction fees are distributed to the full nodes to reward those people staking L1X on the full nodes, the tokens, to be able to reward them for doing that. And that adds an extra utility to the token itself. But 25% of the transaction fees actually go to the validator nodes, and those validators are smart devices, the mobile phones you've got in your pocket, smartwatches. All of those will have the potential to be validators on the network, meaning that we have the potential for millions, potentially billions of validators on the LayerOneX network. And then lastly, is the last 25% of the transaction fees are actually distributed to the foundation, where they will either be reinvested or they will be burnt. So meaning that there is a deflationary mechanism on a set limit of tokens out there, meaning that the utility of staking on the full nodes, the utility that the wallet will provide. So I don't know if we went into the wallet, but with the wallet at the moment, if you're on Ethereum network, you've got to have Ethereum to transact on Ethereum network. If you're on Binance, you've got to have BNB. Through our wallet, you can transact on Ethereum, on Matic, on AVAX, on BNB, on Solana, on L1X, just using L1X token. So the utility that gives to people holding a certain amount of transaction fees in their wallet times the amount of wallets also temporarily soaks that supply of L1X token up. When they use it for a transaction, they replace it with more L1X to do the next transaction. So there's a temporary soaking up of the circulating supply, plus the burning mechanism, plus the utility that is added because you're staking on the full nodes. On top of that, the DEX is looking to actually have L1X token as the DEX token, which is pretty rare to be able to do that. So we're working with them around the tokenomics of that, adding extra utility. And what I'm getting at here is that what we're trying to do here is making it very, very lucrative to hold that L1X token if you're an L1X investor. And so potentially, just those 3 markets I talked about, grabbing 5% of gaming, 2% of digital payments, and 3% of healthcare transactions gives us 20 billion transactions going through the network. And then thinking about those 20 billion transaction fees distributed to the full nodes, to the validator nodes, and potentially being burnt, 25% of that being burnt as the transaction fees come through. Tokenomics, so 55% of the treasury is actually distributed into 6 different categories. All of those categories either reward participation or growth within the network. And then the vesting schedule goes all the way to 30 years. Now, in terms of our partners that we've partnered with, so, MME Law. So MME Law was actually helped set up the Ethereum Foundation. So we seeked out MME Law to set up the L1X Foundation. We partnered with Prism Group in terms of doing the tokenomics, and obviously, as I mentioned before, we work closely still with the University of Western Australia to be able to build out, the white paper at first, and then also do research for us as we look to go into different industries. So they're an amazing partner of ours as well. So now we've covered the capabilities, the market potential. So I want to talk about, for those of you who are interested in investing, forget some of the minimum contribution and maximum contributions. That is for larger investors. But we actually have already, and it's still open right now, we have the private sale which is running right now and finishes on the 31st of March. We will not be extending past that. We've already extended it 2 weeks from the middle of March. And the reason why we're doing that is we want to give the everyday crypto enthusiast the opportunity to get a piece at a private sale level. We already have 3 times the amount that we need offered by large investors and VCs. We're raising 10 million. But what we have said to them is that the 31st of March, when it finishes, whatever's left over, we will distribute to you. But until then, we want to give the opportunity to the everyday person. This is a blockchain built for mass use case, mass adoption for the people. So we were conscious in our effort in making sure that we give enough time there for everyone to get a piece. Whether it's $100, whether it's $1,000, whether it's 50,000, whether it's 250, whether it's $1 million, whatever it is. Right? We just want the opportunity to get a piece. So what does a piece mean? So at the private sale right now, it's 10 cents a token price for the private sale. That 10 cent token, when invested, it will be vested out over 15 months from launch. So launch in August. From the month of August, 1/15 every month for 15 months will be vested to you over that period. Now, where's the reference point? Why is 10 cents so attractive, right? in my opinion, no financial advice, right? A reference point is when we go to the public sale, in June, it will be 50 cents. So you do the maths, 10 to 50, it's a 5x. So in terms of circulating market cap, for those who are thinking about it, the 50 cents, because there's only about 10% of the supply in the first month, the circulating market supply will only be 50 million. I say only because when you look at some of the circulating market supplies of some of the interoperable players out there, Polkadot, Cosmos, I think Polkadot's about 7 billion at the moment. Our interoperability already exceeds those chains. Right? Already they can't transfer logic, they're limited to where they can transfer tokens without using bridges. They're very closed ecosystems compared to ours. So when we go, and before we go to get to the public sale, we will be able to demonstrate a lot of the capabilities of the platform prior to that public sale. Through that demonstration, the world will see exactly what the capability of LayerOneX will be. But we've managed to demonstrate EVM to non-EVM. That's a big barrier we've broken down. We'll demonstrate NFT transfer, logic transfer, capability of the wallet, capability of the DEX. So people will have to wait to see that demonstration. What you don't have to wait for, if you believe that it's coming, and we've already demonstrated the EVM to non-EVM, is to be able to get a piece now, right? And that is normally reserved for VCs or larger investors, and they will get some, whatever's left over. So they won't miss out. So in terms of the private token sale, as I said, it closes at the 31st of March. If you are interested and you want to know more about that, please come and see us. We can talk you through if you want to look to invest. If you're interested in asking more questions around the technology, please come and see us after this as well. If you want to know what projects we're working with, if you just want another beer, please let us know. But I just want to finish by saying we are proud to be a Perth project, and we are proud to have University of WA as a partner. To not only give us validation, but University of Western Australia is one of the top 100 universities in the world, right? They're part of what is called the Go8, which is a group of 8, and they're involved in a lot of intensive research in a lot of industries. So to have them on board is, we're really proud of that as well. But look, lastly, once again, I know everyone's time is precious. We thank you on behalf of myself, Kevin, Mike, and all the team. Thank you so much for coming here and seeing what the capabilities are. Please help yourself to some food. I think that's still there, and some drinks. And look, we're here and welcome questions. Yes, there's actually now.
Mr. Waller.